Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is December 20th, 2021, and today is Monday morning. So looking at the highlights of the morning, the U.S. markets tumble in pre-market trading as worries mount to what's going to happen with this coronavirus, this new actual strain. And also, one of the senators actually rejecting one of Biden's economic plans. So fueling some skepticism to the markets. Now, looking at the markets, no major economic event scheduled for today. And as we look at the various markets, the Forex pairs, the majors pretty much sell off versus the U.S. dollar on their lows. In terms of the indices, Dow Jones and the NASDAQ both sell off sharply. In terms of commodities, gold pretty much unchanged, and oil tumbles below $70 a barrel. Now looking at the stocks, they're directed by the future, so I'd be looking at that. And lastly, Bitcoin just trickling down. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're looking at the Euro USD at a 4-hour chart, and we're at the bottom of the range once again. A 112.54 right there, about 10 pips off of our lows. So this is normal, okay? There's the fact that we're selling off here, the dollar getting stronger as the Dow Jones and the NASDAQ both sell off sharply. Question is whether or not we'll break this and retest our lows of 111. That's what I'd be looking for today to see if this bounce is really a real bounce. Now looking at the Gbp Usd, same story. Back on its lows of 132. If we look at a daily, that's as low as it goes. We've got to go look at a weekly to give us some perspective here. And the next real support is 131.19-ish level, so just be aware of that. Now looking at the Aussie Dollar as well, selling off. Still has some room on the downside. When we look at a 4-hour chart, you still have about 85 pips. But nevertheless, okay, it's significantly trading lower. I mean, it's breaking that support of 171. So that's really an important level as well. Now, looking at the commodities, first looking at gold, not much doing here at 1798, really unchanged from our last week 1800-ish level. Looking at crude oil, though, look at that, a nosedive with the suspicion that this new strain, the Omicron, is going to actually add and close down the markets around the world, and it's already having an effect in Europe as certain countries are shutting down their borders. So we are trading lower and we are gapping down, and we're further getting weaker here. Now a real correction to the move would be somewhere in the 64 65-ish level, so just be aware that we still have some room on the downside. Now looking at the big board, looking at the Dow Jones, look at that, we're tumbling over 500 points in early market trading before the markets actually open. We were trading about 35,200-ish, 300-ish level last week as we sold off from our 36,000 level. So within the week, we've actually paired off over 1,200 points. That's a sharp turn for the Dow Jones. Now looking at the NASDAQ, also trading much lower at 15,561, down about 800 points from our highs. Now looking at the individual stocks, not much doing. I mean, Apple's pretty much in change here at 170. So is Facebook, Microsoft, Amazon. Okay, really not doing much. Even JP Morgan is trickling down, but not something major. Okay, not on a major level. Okay, we are off of our highs of 172. But then again, the markets have been on a roller coaster ride over the last 2 months. So with that said, just take it into consideration. Now looking at today, sentiment is lower. The question is that will we get like a short squeeze going into the end of the year? Now lastly, looking at Bitcoin, trading at 46,300-ish level, okay, as it's trickling down, okay, hasn't really sold off, you know, in a aggressive way, but it has been just showing some mild weakness. So with that said, okay, just keep an eye on it, all right, especially if it gets closer to that 40,000-ish level. This is Fred Razak. I want to wish you guys a great trading day. Thank you.